How to determine your tax bracket. Hello, my name is Daniel Passon. I'm with Robert Hall & Associates as one of the tax consultants. Today we'll be talking about how to determine what your tax bracket is. And so hopefully by the end of this, you'll be able to have a better idea and what not to be afraid of when it comes down to your tax brackets as well. As always, please like, subscribe, and set your notifications so that way you can be notified when future videos are posted for you. Now, we'll be talking about 3 topics. First, common misconceptions about the tax brackets. Secondly, marginal brackets versus effective tax brackets. And as a third topic, how to determine your tax bracket. Now, common misconception about tax brackets. Many people believe that if they make $300,000, they're going to be taxed at the bracket of $300,000. That, unfortunately, is a very old wives' tale or incorrect thing to believe. The reason for this is because there's multiple parts to determine your tax bracket. If you make $300,000, let's just say, first off, is a tiered system. So you're only taxed on the amount of the money that is in each bracket. So our system is what's called a tiered tax system. It is not a flat tax where you're taxed on everything at one amount. So if you have $300,000 of income, and let's just say, for an example, $280,000 is the breaking point between the 2 brackets, that means that only $20,000 of that money is taxed at the higher bracket. And then a certain portion is at the lower bracket. So each portion of income is broken down into each bracket. So you don't need to worry about making too much money and being hit at the higher tax bracket, as I've heard many, many times where someone will call me and say, where's the next bracket? I don't want to make that extra $5,000 because it will jump me up into the next bracket. Make as much as you can. Don't worry about the brackets. At the end of the day, you're going to pocket more than you are giving away. But yes, you might have a higher bracket only on the new money that's going into that situation. That is a very common misconception of the brackets. Next, we're talking about how to determine your tax bracket. Now, the system is a tiered system. There is a marginal and an effective rate. Now, marginal brackets are the bracket you're in. So if you make $300,000 or whatever it might be, you might be in the 24 or 32% bracket. But even there, that marginal bracket is based on not your total income, but your taxable income. That means that you have your income minus your adjustments, things like your retirement, your IRA contributions, your HSA, and then minus your deductions like your mortgage interest, property taxes, insurance, all those things. Those all come off that number and thus get you down to what your actual taxable income is. The taxable income is what determines your tax bracket. That would be your marginal bracket. But at the end of the day, since it is not a flat tax, you are taxed at an effective rate. A certain portion of your income is taxed at 10%, certain portion is taxed at 12%, 24%, 22%. The brackets all adjust every year, but it is a blended average of all of those. So even though you might be in the 24% bracket, your effective rate might be 17 because it's a blend of all the brackets and how much income you have in each one. So you determine your tax bracket based on your taxable income after all the deductions and everything. And once again, it is a tiered system, so you're taxed on only a portion of it. The last topic would be marginal bracket and how to determine it. So back to the original example of $300,000. If you have $300,000 of income and you reduce down your income with your mortgage interest and charity and everything else by $30,000, that means you're at $270,000. Now, the $270,000 is going to be what determines your tax bracket based on your taxable income. That taxable income will then be determined based on the brackets. Every year they change. Every year they go up a little bit as far as the income in each bracket per inflation. So those are what determine your brackets. And then you'll have the tax, which will owe based on what your tax brackets. These are what determines your taxable, your tax bracket, your marginal tax bracket. I do like to reiterate that this is an area where a big misconception has to do with the fact that you are going to be paying taxes if you go into the higher bracket. As much as that's partially true, I do want to harp that don't worry about the brackets. Make as much as you can. Work the extra day, work the extra shift. I will tell my clients every day that, to me, if you are having your life get affected by the extra time, then don't do it. But if you're worried about the brackets, make the money, don't worry about it, because you will keep more money than you're going to be paying to the government. Another area to increase deductions would be your mortgage interest. Now, there are limitations. There's a $750,000 cap on how much debt you can deduct, but that mortgage interest that you're paying also is another area of deductions. Not to say I advise you to get additional debt and have additional costs, but if you do need to take a cash out to pay off loans, or if you have any sort of additional debt you are pulling out of your home as equity to put into your house, those are all deductible mortgage interest items too. And that's, if you're increasing your deductions, it'll also increase your ability to lower your taxes. So another area would be also increasing your deductions via having your mortgage interest too. If you are renting right now, a mortgage could help you in getting your taxes higher as well as your mortgage interest, but you'd always want to weigh out the pros and cons of owning versus renting. But if you are a highly compensated person and you're renting, getting a home could help you, given the numbers make sense. That would definitely help your taxes. So I'd like to, hopefully you enjoyed this for today. Hopefully you understand everything a little bit more. If you'd like further information, please go to our website, www.roberthalltaxes.com, and reach out to our marketing department, and they will help you get in touch with one of our advisors, set an appointment, and go further into your questions if you have any. Hopefully you have a good day, and we'll talk soon.